my biggest advice for improving performance, first of all, the main thing is that you have to commit to a strategy, and and really choose a style and make a commitment, a long-term commitment to that. If if every time things are, you're having a tough time, you're looking for the holy grail and you're looking for the next, bigger, better deal and constantly changing your strategy, you're never going to become really good at any one thing.
Right.
I didn't do well in the market for 6 years. Matter of fact, I was at a net loss. Luckily, during that time, I was poor and I didn't have a whole lot to lose. But it was everything that I had. I blew up a few times. I had a broker blow me up first, and then I blew myself up with options. And so I had to go through that. And we didn't have this kind of forum, and we didn't have the type of advice that we have nowadays. So the learning curve is so much shorter. But I stayed with the same strategy and knew that it wasn't the strategy, it was me. I had to learn how to wield that sword. So whether it's the kind of trading that we do, whether it's an O'Neill type strategy, Mark Minervini strategy, or if it's maybe you're a value buyer and you're a Bill Miller type person, whatever it is, stick with that. And don't try to blend them either. I've seen people, they want to take, a value approach and they say, well, I'm going to take the O'Neill, cancel them and apply it to value stocks. Doesn't work. Doesn't work. All right. So growth stocks don't trade at 7 times earnings, high growth names. So, that would be first of all. Second of all, the number one thing that, changed my performance was cutting losses. And I know, people hear this over and over and over. But and like most people, when I first started, I tried to cut my losses and I was pretty good at it. And then every now and then, I'd fall in love with a name or the market would roll over real quick and I'd get underwater and I'd wait for things to come back and they didn't come back. And before you know it, I got big losses. It has to be absolute, it has to be, like you said, Chris, a line in the sand.
Right.
When I made a decision, it was in the late 80s. I said, that's it. Starting today, I am never, ever allowing a stock to go down more than 8% ever again for the rest of my life. And unless it gaps, and then I'm selling it right at the market. And then I'm taking the next trade, then I'm the next best price. And from that point on, I never did. And my performance changed dramatically from that point. There's a section in my book where I talk about the risk adjustment exercise. It's where you adjust your losses to say, I use an arbitrary number of 10%. I took all my stock trades and I said, what would happen if I just stopped, my losses out at 10%? And it turned a small 12 to 14% loss into a 70% gain. And I said, well, that obviously is wrong. From just such a small change, but it was correct, and it really opened my eyes. So yeah, so that those would be, real quick off the top of my head, the two things that really commit to a strategy and make sure you're managing the risk reward relationship.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.